So is DIP financing dead?
No, I don't think it is. I think that there are providers that are out there who want to provide that capital. They know they're going to need to. There's certainly constraints. All the institutions, traditional institutions, are stressed because of the write-downs and the lack of capital. But it's a market that there are players in. They're just being more judicious in how they're deploying that capital. But the market's not dead. Well, I think the opportunities are really across all industry segments. I think that especially the traditional commercial bank lenders, they're in credits, and those credits are having difficulties right now, and they have to decide whether they're going to provide the DIP financing for the companies just to support it. It's a defensive DIP. They need to support it through a process or even to a liquidation, and so they're finding opportunities in their own portfolio. When it's outside of a transaction that they're not already in, I think every industry is going to have stress, and so it's going to be wherever you can find it. If I have the capital, I want to deploy it, and it's just really it's kind of value investing. It's what's the spread given the risk profile. I don't think it's going to. I think it's going to be throughout the rest of '09. Things are not going to get any better. We're probably going to be into 2010 where you start seeing a real recovery. You might hit a plateau where things stop getting worse sometime in '09, but I don't see a turnaround coming in the industry until at least 2010. There's way too many over-levered middle market companies, and we haven't started to see the deleveraging of the middle market through bankruptcies. You've seen the large cases, but you haven't seen an abundance yet of the $100, $200 million revenue companies filing bankruptcy yet. And it's going to happen. It's going to have to happen. And that's going to take a number of years, or certainly multiple quarters, to get through for that all to work through the system. I think the changes in the bankruptcy law that were made most recently have made reorganizing a debtor, reorganizing a company in bankruptcy significantly more challenging. The limited number of extensions to exclusivity, the shortened period of time to accept or reject leases, all makes it much more difficult to reorganize a debtor, which ostensibly is the point of a bankruptcy filing, is to reorganize the debtor. Combining that with the terms that lenders are providing on the DIP facilities, shortening those up and making very discrete and hard milestones really forces the debtors to either liquidate or sell the company in a 363 sale. So I don't know if that's a good thing or a bad thing, but there's been dramatic changes, and it's made it much more difficult for debtors to really truly reorganize in a bankruptcy.